Welcome everybody to the 40 Finance channel. My name's Jeff Beers. Today I'm going to look at Zillow Stock, the real estate app that has become so big here in America. Is Zillow Stock a buy in 2020 with all the things going on right now? We're going to do a deep dive analysis. But as always, as a disclaimer, my stock picks and projections are for entertainment purposes only. Please talk to a financial professional before taking on the risks of the stock market. That being said, though, if you enjoy stock market analysis, going deep on stocks, talking about investment ideas and personal finance videos, then please subscribe to the 40 Finance channel. Thank you to everyone who's subscribed so far. Alright, so the key with Zillow Stock and its primary competitor right now, which would be Redfin, is this concept of changing the real estate game, right? So what started off for both of these companies as an easy way to search through real estate listings in one centralized app is now starting to branch out. Almost exactly like they planned. It's starting to branch out to incorporate more services and bring together the concept of, hey, you know us as a property search engine, so to speak, or a property notification engine if you're watching houses in your neighborhood. What can we do to build that into more services? That's exactly what Zillow's doing. Redfin has similar plans of their own. So when you look at Zillow today and the app that you hold in your hand today, it's really the future evolution of that app where the value of the stock lies. Of course, all of that depends on whether or not you believe that they can make those dreams become a reality. All right, so I grabbed this slide real quick from the Zillow Group Investor Relations, and you can see some quick highlights there. $2.7 billion in revenue in 2019, 173 million users. They had 8 billion website visits, or I suppose that's combined with traditional website and app. Then you start looking at the key numbers for me. You got 110 million homes in the database, and I imagine that grows just a little bit every day. And you compare that number down below, 80 million homes that have been updated by the users. So that's a strong signal, in my opinion, as far as engagement, that folks have taken the time to go in, claim their listing, make sure it's accurate, so on and so forth. That's a pretty strong correlation between homes that are in the database and then homes that have been updated by the users. So good metric there in my opinion. And then the quick company summary. Zillow, the top real estate website in the US, is building an on-demand real estate experience. Whether selling, buying, renting, or financing, customers can turn to Zillow businesses to find and get into their next home with speed, certainty, and ease. In addition to for sale and rental listings, Zillow offers buys and sells homes directly in dozens of markets across the country. So you got your two major themes there in that couple paragraphs, right? You have the database that most of us are familiar with, and the expanding of the services offered within that database in your progress of buying a home. And then you have Zillow offers, which is where they're actually, call it flipping homes, right? They're making offers directly to homeowners, looking for properties that are below market value since they have all this information in their database, and trying to sort of scale flipping, I guess, to some degree. We'll talk about that business here in just a little bit. Okay, this slide here kind of gives you the concept of where Zillow is today versus where it's going in the future. On the far left-hand side, there's a picture there of Zillow 1.0, which is, your basic search and find. They also have real estate agent ads in there that they make money on by, agents that are buying ads to try to acquire clients, right, on both sides of the coin. Now you see Zillow 2.0, which is the next four pictures, where they're getting into the transaction, right? And that's the big unlock. Whether you're renting, buying, financing, or selling, Zillow's dream is to get into all these components. And to be fair, they have some of these things already available in markets. It's just a matter of tweaking the margins and making sure that it's ready to scale at a nationwide level. Okay, let's take a look at Zillow stock today and see where everything sits. Got a price today of $57.63. And on the 1 year chart off to the right hand side, you can see that $57 is relatively high for Zillow in terms of what we've seen over the past 12 months. The 52-week range officially topped out at $66. You also had a low of $20, which I'm going to assume happened during the crash. It's hard to tell from this chart. Important to call out that there's no P/E ratio here. Zillow is not profitable. They are burning cash, so to speak. No forward P/E either. But you look at the top, so no forward P/E, trailing 12 months revenue of $3.4 billion. They have a cash on hand of $2.5 billion, and the debt comes in at $2.3 billion. So even though they are not profitable, unlike some startups, I would say that they have a nice pile of cash. And while $2 billion in debt for a company that doesn't have necessarily any profits, you've got to like the fact that the revenue and cash positions essentially equate to much more than the debt load at hand. All right, so without a P/E ratio, it really gets into sort of a guessing game when you want to talk about, what is Zillow worth? And that's why a stock like this is always going to be volatile, because you just don't have that many metrics, fundamental metrics, to sit back on and make an analysis of price, right? Nonetheless, let's take a look at the basic fundamental valuations over the past several quarters. And as I mentioned, not a ton to look at, certainly not on trailing and forward PE. It looks like way back in 2018, you did get a peak of a forward PE at $47. That is also around the time that they launched Zillow Offers. So I wonder if that was just a brief moment where they were heading towards profitability, and then they, sort of opened the new business line, which set those dreams back a little bit. Price to sales has been a little bit of a roller coaster. The current metric of 363 is not too bad. You were as high as 6.27 back in June of 2019. And even in March, when the market was down pretty big, you were at 271. So not too bad on price to sales. Price to book, though, is up, which is the wrong direction for that metric, is up slightly. Okay, so let's look at the tip ranks dashboard to see how the best performing analysts are looking at Zillow stock today. Shout out, as always, to Tip Ranks. I am a paid subscriber. You can use my affiliate link below to check out the service. It gives you a lot of insights into what analysts are saying, hedge fund activity, insider trading, things of that nature. I always sell it as, hey, this is the other side of stock market metrics that you don't get on your regular platforms like CNBC and Yahoo. So check it out if you're interested and want to support the channel. On the Zillow side of the coin for Tip Ranks, we have 8 buys, 5 holds, and 2 sells. So at this price, again, we're inching towards 52-week highs, and you can see that analysts are starting to get maybe a little nervous there. I would say that the 5 holds is probably where I would sit if I was making a recommendation on the $56 range. The median price target for Tip Ranks, if you put all these girls and guys together, comes in at 52.46. That's about 9% downside from today. We do have a high bar estimate of $80, and the low comes in at 20. So obviously a big bear and a big bull represented on this median target. All right, so there's obviously a wide range of opinion on Zillow and, which way is it going and when are profits coming and what to think about this company. And I'm just going to share with you one of the ways that I look at it. So if you go into this adjusted EBITDA margin by segment, which comes from their investor relations most recent presentation, which I believe came after their Q1 earnings, what I'm really looking for here is like, hey, I know you're not profitable. Are you scaling, and how are the margins going? And the good news is on this homes division, which is basically Zillow offers, you go down the list and the top row here is just the Q1 quarter of 2020. Okay, so that's important because the second row is fiscal year 19 total and the third row is fiscal year 18 total. And what we see out of the homes division, if you start at the bottom and go up, you had a minus 93% EBITDA margin. That improved last year to minus 18. And then in Q1, you're already on pace to beat the revenue and the margin, assuming everything holds true. So that's a positive sign. Then when you get to the IMT, which is basically your advertising and the database and selling things against the database, if you progress upwards from the bottom, you can see that that EBITDA margin and the revenues associated with it are going in the right direction, right? You're getting more revenue and you're getting a better margin, which is a positive sign. Over in column 3, we have mortgages. Mortgages in 18 had barely started, so I didn't circle that one because it almost doesn't count. You can see that, and without having enough data over a period of time, it's hard to really tell what that adjusted EBITDA was. But fiscal year 19 was a full year, and you can see that the mortgages division did lose $23 million, and it had a margin of minus 23%. Now, up to the quarter of Q1, while very slight on the improvements, you do have minus 22% margin. So some positives there. I also don't know how strong mortgages that I don't know how much I would have expected out of the mortgage division, considering that the country was closed down for at least one of the months in that quarter. And then from a consolidated standpoint, by adding the mortgages, technically the adjusted EBITDA margin has went down here in Q1, but what we do see is the pace for revenue. If you extrapolated it out by 4 quarters, you're looking at a pretty significant revenue gain if things stay on this pace. So it would go somewhere in the neighborhood of from 2.7 billion, and then we're on pace today to almost hit, right on the nose of 4.5 billion. So some strong things going on. And what you have to look at with this, it's kind of, it's similar to like an Amazon game, right? Where these margins are not big. In fact, most of them are in the wrong direction. But I think what Zillow's trying to do here is, increase the scale. And sometimes to increase the scale, you have to take a hit on margin, and they're going for the much, much larger opportunity. Seeing how this chart is kind of stacked out, I'm guessing that we're 2 to 3 years away from profitability. But if revenues continue to go up at this pace, then you're talking about a company, if the real estate game changes, could be a monster winner. Not going to happen this year. I would say very unlikely that it happens next year. So if you're playing this game with Zillow, if you believe in what's going on here, you have to commit for 3 to 5 years from a long-term standpoint. All right, so my bottom line for Zillow, which I kind of alluded to just here a second ago, 3 to 7 years on this. I said 3 to 5, it's 3 to 7, whatever you want to call it. You are banking on real estate disruption. You're banking on an app and a database to outpower the historical constraints that the real estate agent world has on real estate. So you're going to have to take your pick. If you're into Zillow, you have to be into real estate disruption, right? If you think real estate agents and personal service and driving around with people and looking at neighborhoods, if you feel that game continues and perhaps even grows, then you're probably out on Zillow, to be honest with you. The next part of the bull case for Zillow is something that we've seen with Zoom and Teladoc and some of these others during the virus, and that is we are pushing digital adoption, right? We're pushing digital hard and people are buying in, right? So folks that have avoided adopting digital grocery store deliveries or you name the service are starting to experiment, which is opening up this world and basically compressing user behavior from a 3 to 5 year stretch on digital adoption. Now we're really, some people would say that we advanced 3 years in digital adoption just in the time that the world was locked down. My next point on Zillow that I think is a bonus for investors is this stock is going to have volatility. It's shown volatility. And if you just look at a 1 year chart, you will see the ebbs and flows. So my 2 cents is knowing the volatility is you are looking for some lows. It doesn't mean that you're going to get this stock at $11, right? Now you might. But if the pandemic had a low bar of $20 stock price, that maybe in normal times with the ebbs and flows of real estate, you can try to get in around $30, $35. That might be possible. It just depends on what your goal is. But know that right now, close to the 52-week highs, I would be inclined to wait a little bit. I think the big question with Zillow is, will the Zillow offers / iBuy program be a success, right? Can they essentially scale house flipping to some degree and digitize it? That would be a huge win. It's going to take a lot of trust by customers to buy a flipped house through an app, in my opinion, but I'm sure Zillow has thought about these things. They need that to work or at least contribute to the bottom line margin and by 3 years from now, 2 to 3 years from now. If that's not contributing to the bottom line in a positive way, then they're probably just going to have to shut the concept down and focus on selling from an integration standpoint, and that's going to be their play. Another thing to note with Zillow and a stock like this with real estate is you obviously can come across sometimes when real estate dips, activity slows, and that's just going to bring this stock down potentially for long periods of time depending on what happens. Everything is perfect in real estate, mostly speaking right now, okay? Outside of the unemployment rate, you have, the 0% interest, you have competing demand because supply is a little bit less. So there's a lot of things in favor. If you woke up one day, let's say 10 years from now, and Zillow made you $1 million and you're getting ready to retire, on a bad stretch, real estate could turn ugly and you'd be left holding the bag waiting for this stock to bounce back. So there's definitely a risk there. I think that risk, to be honest, is inherent in every stock to some degree. But with Zillow's case, they could be doing everything perfectly and still get zapped by a real estate market dip that spans across the country. So lots of things to consider with Zillow. At the end of the day, I like the stock. I'm fascinated with the stock. I will likely buy some in 2020, perhaps sooner than later, if we see any more dips like we saw yesterday. Market is too high for me right now. I will try to sneak in, maybe in that, certainly under 50 and hopefully closer to $40 mark. And then that's going to be a buy and hold for a long time for me. But I think that the company as a whole has potential to make this concept work. It is hard for me to calculate the consumer interest in buying a home from an app, but I do think behaviors are changing. I think the upside here is massive. Some dominoes are definitely going to have to fall into place for Zillow, but you know what? If you can get in this stock $40, $45 on the right day and hold it for 5 years, there's an amazing opportunity here. You have to believe, though, in real estate going, let's just say 65-70% digital, right? If you don't believe in that, then I wouldn't buy Zillow. If you see that future, though, I would consider jumping in. All right, so that's Zillow stock from my perspective. Hope you guys enjoyed this. Please give me a like and subscribe if you did. I'll see you on the next video.